Hello guys and welcome to Crypto Dealers. My name is Andy and today I'm gonna show you a complete tutorial for Bybit with all the important features so that you can use the platform in the best possible way. This is not a sponsored video, but I have an agreement with Bybit so that if you register using my link, you will always get the highest possible bonus. As of right now, it is a $1,600 bonus, and it doesn't matter whenever you see this video, you can always use my link and for sure you will get the highest possible bonus because I have this agreement, okay? So, how do you find the link? Just have a look at the description of the video or at the pinned comment at the top, okay? So, this will look like this. And if you click on the link, you will get to this page here, okay? So all you have to do here is enter your email, your password, click here, sign up, and you are done. So then we are here. As you can see, with here the order book, you can see the prices here. At those prices, people are willing to sell, and at those prices here, people want to buy. What we can trade here is coin margin, Bitcoin, Ethereum, EOS, and Ripple. What does it mean, coin margin, and what does it mean to trade with USDT margin? Coin margin, to trade this, you have to have Bitcoin here in your account. And if you trade like this, it means that your profits will be paid out in Bitcoin. On the other hand, if you would trade here, Bitcoin USDT, you would need USDT Tether in your account and your profits would be paid to you in Tether, okay? So, as you can see here, if you use Tether, there are more pairs available, like also, for example, Litecoin, Cardano, Polkadot, and Uniswap, okay? And we also have here inverse futures. What does this mean? You would trade, or let's say bet or trade the Bitcoin price on the 25th of June or here on the 24th of September. Yeah, this is inverse futures, but usually we would trade here Bitcoin, okay? And to trade whatever you want to trade, you have to fund your account. So you have the possibility to use the fiat gateway to buy crypto, or if you already own crypto, you can simply deposit them here. You go here, go to my assets, okay? And then you can deposit, for example, Bitcoin here. You just click here, deposit. Then you would see your wallet address and you can transfer your crypto here. This would take, depending on the condition of the blockchain right now, I would say about 20 or maybe 30 minutes. And there's also a new feature here right now. You could make a sub account. If you go here, account, and then you simply add the sub account. When would it make sense to use it? Let's say you are in a long-term Bitcoin trade because you think that the price is going up and you want to trade the swings, then it would make sense to make a sub account, fund this account, and then you can trade the swings there, okay? So let's go here. Let's say we would like to trade Bitcoin coin margin. This is where we are right now. So you can see here, isolated, we want to trade with margin, okay? If we would not use margin, a leverage, then if you would fund your account with, let's say, $100, then you could trade with $100. If we use leverage, for example, a leverage of 10x, this would mean that you can trade as if you would have $1,000, okay? That means if the Bitcoin price changes just by 1%, it would change in relation to your margin by 10%, okay? So here you can see cross margin or isolated. I would always go with isolated margin because if you use the cross margin, then this trade would have access to all the funds in your account. And if you choose isolated margin, then it can only access the margin that is used for this trade. Okay, so always I would recommend to always use isolated, and here you can adjust the leverage. You can simply drag and drop it like this, and or you type it in here. Okay, I would say a leverage of about 10 is okay, so we simply confirm it here. What we can do now, yeah, if you want to place an order, we have limit, market, and conditional. What does this mean? If you place a market order, it gets filled immediately, yes? As you can see, this here is the price, and if you place a market order, you also have to pay a little fee, because you are not a market maker, because you are a taker. This means you take liquidity out of the market. On the other hand, if you place a limit order, then you provide liquidity to the market and you would get paid this fee. Okay, so if you would like to place a limit order, let's say for $1,000, okay, we could type in the price here. Let's say we want to buy if the price reaches a level of 55,600. Okay, then we have to decide, do we want to go long or short? This means, do you think the price will go up from this point here or down? If you would like to place the order, you're pretty close now, as I can see, let's say 55,200, okay, and place the long order here. Okay, here you see the details, and you press confirm. Then we have it here at the active orders. Okay, and we could adjust the price here afterwards, and it would be in the order book as long as somebody up here is willing to sell Bitcoin at this price here. Okay, for now we will cancel it, and you have to see what we take the market order, yeah, for this example. First of all, because I just placed the order now to show you how it works. Before I place an order, I usually use TradingView for technical analysis. Okay, this means I check if the price is in a certain pattern, or where are previous support and resistance levels, and based on this analysis, then I decide, do I want to place an order right now, and do I want to go long or short? Okay, first thing we have to do is analyze the market, and then we make the decision. But for now, we just place it, that you can see how it works. So we use, say we want to make $100, okay, and because we're using leverage, yeah, we are going to have an order that is worth $100, but we have the leverage of 10. This means we are only going to use $10 of our own money. Okay, so let's place it here, buy long, confirm, and boom. As you can see, we are here in the market. Here are the order details: quantity, the value, entry price, liquidation price. What does this mean, liquidation price? Liquidation price means, since we are using leverage, if the order goes in the wrong direction, this means if we, for example, place a long order and the price decreases, then if all our position margin is used up, then the order gets liquidated and it's gone. So I would always recommend you to use a stop loss that is slightly above the liquidation price, because we want to avoid to get liquidated. So on the other hand, if we have an order, okay, a position, and it goes in the right direction, yeah, then I would recommend to place a stop loss slightly above our entry price. Okay, as you can see here now, the order is slightly in a loss, so it doesn't make so much sense to place it. But this is just for demonstration purposes, as you know. Oh, now we have a little profit, and I will show you something. Like, we could place a stop loss here or a take profit. This means, as you can see, we entered the position at this price, and we could say that we want to close the position if we reach a price of $58,000. Okay, then the position would close. On the other hand, we could place a stop loss order. Let's say, for example, 53,000. This means if we would confirm it now, our order gets closed and we would secure our profit at 58,000, and at 53,000 we would also close it, but of course in a loss. So for now we just keep it like that. And what else? Okay, wait, let me show you to make sure you see it. This is trailing stop. Okay, trailing stop. This means if we place the order here, yeah, and the price goes up, the stop loss would also follow. Okay, say we put in $10. If the price goes up here, yeah, and the stop loss follows the price, and if it would happen that the price would retrace, this means turn back, then if it retraces for $10, the order would close. Okay, then if you want to close the order, we have also the possibility to close it here with market. This would close it immediately here. Okay, or limit, we could put in a price that we want to sell it for. Okay, so let me put it back like this so you can see this here. For now we just keep the position open. Yeah, so what else do we have? We have the third order type, conditional order. What does this mean and why should we or could we use it? Let's say we made our analysis and let's say the price is in a triangle, okay? And we want to trade the breakout. So, and we don't know if the price is going to go up or down, okay? In which direction is the price going to break out? This is a good use case for this type of order, let's say. Or another possible scenario would be that you don't want to sit in front of your computer or your cell phone and you assume you think that the price will go in a certain direction and you want to open a position there. Let's say you want to open a long position if the price retraces down to 54,000. Okay, then you could place it like this, enter $100 or whatever you want, buy long or short, whatever you choose, and this would be a good use case for a conditional order. Let's say you would like to place an order if the price reaches, for example, $59,000 and you would like to open a short position, then you would simply click short and it would be here at the conditional orders tab. And yeah, this is a good use case for a conditional order. So those are the three order types. And yeah, that's it. For now, you can see we are here in a slight profit. And yes, I wish you all the best for your trading career. And if you like the video, give it a thumbs up. And I would also appreciate it if you would subscribe to the channel. And yeah, see you.